Hello and welcome to a new edition of CryptoKoryo podcast. Today I'm extremely happy to have TN again here for the second time in our podcast. Hello TN, how are you doing?
Yeah, I'm doing well, and yeah, just keeping myself busy with our launches.
Yes, I mean, just from seeing from outside, we can guess how busy you guys are at Pendle. Always building is great to see. Let's talk about that actually. So we've done a first interview where we covered the basics, a good introduction to Pendle. So I invite the audience who has not seen that to go there to have a better understanding of the yield narrative, the LST narrative, the tokenization of yield, all these things that you guys do to have a better to be better prepared for this interview, which we aim to be more in depth compared to previous one. So last year it was around 9 months ago where we had the interview. At that time we were already talking about the success of Pendle. At that time it was already in the TVL, the token, the growth in the sentiment of users. But the TVL was like, if I remember correctly, around 55 million or something like that back in 9 months. Now it's like
Probably
it's like 100x that. So you're around 5 billion now. How does it feel?
surreal. It was very surreal. I think for us, by the end of last year, we had wanted to target at least like what we set out to target was around 300 million in TVL. We didn't meet that target. We fell short of it. We picked at 250 million, but I think towards the end of the year, it kind of flattens at around 220, 230 or so. Um, but I think in a short span of time this year, in the first couple of months, we we've seen very significant growth on the TVL front. Big part of it was really because of the narrative. Today we are closer to $6 billion in TVL. Um, the first billion was very special because it was like a milestone, right? To get to the $1 billion in TVL was like made us had us an entry ticket to a very exclusive clubs of protocols with $1 billion in TVL, and then beyond that, it was really I think it still feels good to see the number goes up, but at the same time, I think there's a lot more responsibility on our end, and then we have to think about implementations and strategies and how we can best position ourselves to continue to capitalize on the momentum to keep growing at a pace that we want to.
Absolutely. We will talk more about the growth strategies later on. You mentioned about narratives. We will talk more about narratives as well. But I remember, like Pendle has been since the start very good at writing narratives and having a very good timing and understanding of the market and the needs and adapting very quickly and being flexible with a lot of success. You've done that initially with the staking narrative, last year. Um, and then also Arbitrum, which Arbitrum season, which benefited Pendle, and it was a great also timing. Then later on, real world assets. However, all of these things combined didn't bring TVL of Pendle, much above 100 million. It was this restaking narrative that all of a sudden changed things dramatically. Why do you think restaking is so special and so different?
I think it's a combination of multiple factors. For one, the technology that restaking introduces is interesting, very different compared to the others. And then the other aspect is also the like at a more macro level, the crypto community was just more aggressive at the start of this year. It's because of macro changes and with Bitcoin ETF getting approved, I think that interest in crypto revived, and as a result, there's a lot more capital inflow into the sector, which helped raise everything. But coming back to the narrative, I think yes, we had relative relatively good track record in identifying opportunities and then affiliated our brand and product to some of these narratives, the ones that you've pointed out. I think what's so special about restaking is actually the points. Now, never in our lifetime we would, or at least like me, I didn't imagine points to be the main accelerant for Pendle's growth. We've had some exposure to constructing points related implementation or markets last year when we listed Swell because they were issuing Pearl,
Hmm.
but that was our first I'd say like exposure to this particular type of implementation. So with EigenLayer, we've always had an interest in EigenLayer and the restaking products around it, but the market wasn't. I think it wasn't ready in the like Q3 or Q2 last year, but towards the end of last year, like in the last couple of weeks of December, the interest in restaking heated up again. I think a big part of it was because of the point system. So again, like EigenLayer, sorry, point system has been around, but EigenLayer popularized it, and then the restaking protocols they were building on top of EigenLayer kind of brought it to a next level. So from our perspective, because we've had experience working with points in the form of pearls in the past year, I think where we see ourselves and the benefit of sorry the positioning that Pendle could assert ourselves into was actually to allow for users multiple level of points exposure. So when we line up that market, like say when we listed ETH, users who are buying into YT tokens had exposure to the EtherFi points as well as EigenLayer points. And because EigenLayer was growing quite tremendously in a very short span of time, I think there's a lot of expectation around the market valuation. So what Pendle did was to make the points tradable, and that effectively became a very very effective way for users to gain exposure into the into all these points without having to have the initial capital outlay. um, like if they want 100 points or 100 ETH worth of points, they would have to have maybe 100 ETH, but a lot of people actually don't have that amount of money. So with the yield stripping that takes place between among all these yield bearing assets into PT and YT, the ones who want to have maximum exposure in say like the EtherFi points, EigenLayer points, they can just buy the YT. But at the same time, when the demand for YT increases, it also translates to a higher implied yield. And at the same time, um, a high implied yield means higher discount of the PT. So that also created a very, very interesting dynamics between the PT YT side. So we
Hmm.
have a group of users who went all in on YT, and then we have another group of users, typically the larger institutions, wanting to just like because of the size, they want to have like a very attractive fixed rate. And at one point in time, fixed APY on Pendle for say ETH and Easy ETH were trading at around 60%. So that became in itself a very attractive proposition for bigger institutions with very sizable amount of ETH. So they acquired that, and that is really how I think the market played out for Pendle users.
Yeah, it seems that, as you mentioned, that there were a few things that lined up in terms of timing. One was market conditions. We knew before that from looking at the stablecoin market cap in last year, we knew that there is still a lot of money in crypto, but being sidelined, waiting for those market conditions to pick up. Then EigenLayer launched and market conditions improved all of a sudden, all at the same time. And then all these LRT related projects all launched almost at the same time in Q1, early Q1. Uh, and that was a big accelerator for Pendle as well. Now, season one of many of these airdrop is over. EigenLayer has announced a token. Pendle benefited a lot from all this LRT narrative and risk taking. There will be a season two, but do you expect now with all these TGEs of LRT protocols, Ethena, all these big protocols that are now valued at plus billion dollars? Do you expect some calmer periods following the season two airdrop of all these restaking and LRTs for Pendle?
Yeah, so I personally expect the continued interest in points trading. Um, for one, because points trading has proven its effectiveness in helping a lot of these protocols bootstrap initial traction. So I think my view of like the role of points in a life cycle of a project is that it is that points campaign is a very very good tool to help protocols gain initial traction. Subsequently, with the traction, they can let's say if they were to consider a launch pool or launch pad on any of the centralized exchanges, that traction helps with the conversation. It gives the projects more leverage when they were discussing about the commercials. And then, very importantly, the points trading also forms a view on the potential price discovery. And we've seen in multiple cases where when the points market is very active, it generally helps with the price discovery of the tokens when the TG takes place. So I think this role of points campaign will sustain, but of course, like it might evolve into another form one way or another, maybe slight variations further down, depending on like the market sentiment and the kind of products that that is implementing the points. But I think to a large extent, it because of its proven traction and effectiveness in helping bootstrap liquidity, it will continue to go down as one of the more important, I'd say, considerations or go-to-market strategy for subsequent launches. Now, independent of EigenLayer, I think we are also seeing successes with, say, Ethena and to a large extent with Circuit as well, because prior to having the points tradable, Circuit was maybe relatively small at 100, $200 million in TVL. Today, they're actually one of the largest pre-deposit protocol campaigns, currently at around $3 billion in TVL. Now, my view is if when they launch their own V2 mainnet, they will definitely incentivize the migration of liquidity from Ethereum to their own chain. Even if we assume, say, 10% of that or 20% of that goes over um, to the Circuit L2, that's still quite a substantial amount of TVL. And I think it will put them probably in the top 10, top 15 TVL immediately. And then with that amount of liquidity circulating in their ecosystem, there's a lot more that they can do. And then also like just on the restaking part, right? I believe that right now with the successes of EigenLayer, there are alternatives that are launching soon. So for example, like Karak and
Mhm.
then Symbiotic that was announced last in the past 2 weeks, they will start to gain traction and attention. We want to continue to establish ourselves and be involved in this particular market segment. And we look to introduce like newer markets across these different ecosystems to allow like protocols to gain participation from the community.
I agree with you. I think the point system is a new meta in DeFi in general that I think is gonna stay here, because prior to that, the meta was for actually launching and bootstrapping liquidity initially was airdrops. The problem
Mhm.
with airdrops was that okay, you do some transactions as a user, but then there is no way to quantify, how much is worth, how much this is worth, or so you do some transactions, you stake something, and then you say, okay, I've done the things, and then you're done, and then you don't, maybe you switch to other protocols because there is nothing, there is no leaderboard, there is no way to quantify that. Now, point system changed that so that now you know that. And you know by default that these points will convert to airdrops, and the more points you have, the more the airdrop. So there is an incentive for users to stick to the protocol and remain active, which is what protocols want. And I think this is, and by the way, this is, I'm seeing now this being used everywhere. So not just restaking. Now, perps are using that. Blast, for example, is using, they have their own point system. So it seems that this meta is going to stay here. And Pendle now is positioned to benefit all of that, not from restaking. So um, let's talk about AVSs. EigenDA now is was the first AVS to go live. Um, Prior to that, as we know, there was no restaking. It was just a game of points and airdrops. Now, EigenDA is live. I believe there are a few others that are now live, like Omni and others. How do you see the restaking like yields evolve from here, and how does Pendle is positions, not talking about the points aspect, but more about the yield aspect in terms of AVS integrations? Is this something that will come through the LRT protocols you're working with, like Renzo and EtherFi, and you don't need to think about the AVS aspect, or are you directly working with AVSs to integrate them and provide some yield pools?
Yeah, so generally at this stage, the so we are paying attention to the AVS ecosystem, but by and large, our interaction with them will primarily go through the LRT protocols. And that means, in my view, I think the interest around LRT protocols will sustain because of the outlook for AVSs. Again, to take a step back, I think AVS is still a relatively new concept because there aren't that many AVS products just yet. But in the long term, I do believe that there will be a lot more that will be built, and then there will be a substantial ecosystem around it. But I think that that will naturally take some time to build up. So we will observe carefully and then work with the LRT protocol partners to see how we can best accommodate and yeah, translate all these APYs back to the users.
Mhm. Let's talk more about the Pendle and what it's doing. Last year, you defined Pendle as a protocol that allows the tokenization and trading of yield. A lot of things have happened since last year. We know that there is this point system that we mentioned, but is this still today a good definition of Pendle?
Yes. So Pendle has not changed in the since V2 launch. So V2 remains like basically the core contract remains the same as the one that we launched in 2022 December. What's changed is how we contextualize the use cases. So as you pointed out in the earlier part of our conversation, right, we adapted to the LST narrative. We adapted Pendle to Arbitrum. So when Arbitrum grew, we also benefited from that growth. And then real world asset, and more recently, restaking and points. I think because the underlying mechanics hasn't changed, we're still a protocol that takes in yield bearing asset and then splits into PT, YT. It's just that for points, the YT has additional component in the form of points. But otherwise, yeah, it's still the
The
same.
same mechanisms.
And I expect that, yeah, I expect that actually with points trading, a lot more users now understand the relationship between PT and YT. So subsequently, when we come across a good asset, for example, like SUSDE, I think there's longevity in that market because SUSDE is actually offering very attractive APY to users. It's trading above 30% APY. I think more recently it was around 37%. So if they are able to, I mean, even if the rate does not sustain at 37%, the mere fact that there will be expected fluctuations in the APY would mean that it can be a very good asset for users to trade. Then that means for users who want to lock in at, say, 20% or even 15% APY, they can do that on Pendle. So I think in the long term, even if we take away the sets incentive from SUSDE, it will be an asset that can generate organic interest from the community. So more of that, I think, will take place.
We will talk in a minute about strategies to use on Pendle and go deeper on PT and YT. But before that, and to understand better the terminology used by Pendle, so we are talking about yield, and when we talk about yield, there is all these different terms like APY, implied APY, effective APY. Can you briefly explain the differences between these and how these MPYs are, impacted?
Sure. Yeah, it can be confusing sometimes with so many new terms. But I think in Pendle's case, the most important number is the implied yield because the implied yield is an aggregated view of the yield of the markets subject to the supply demand there. So um, implied yield is what users on Pendle are trading. Um, so like let's say if there's a lot of demand for say SUSDE APY, then the implied yield will go up. In contrast, if the demand plummets, then implied yield will likely go down too. So that's like I think that's the number that is very important on Pendle, and that's what users are typically trading. And then for effective APY, it is I think in simple terms, it's really just like the effect, like the total amount of APY that users are entitled to. So that should take into account like the cost and all the other components. So this is more like a take home. And then fixed APY is um, is what it shows. It's the opposite of floating APY. Again, I think like for context, right? In crypto's case, in DeFi's case, a lot of APY is actually floating APY. because they're tied to the utilization rate. And for a long time, there wasn't a very good way for users to lock in APY at a desired level. And what Pendle did with the, say, PT was to allow users to obtain an APY fix um, uh, up until a certain maturity. So, for example, if the pool has a 1 year tenure and let's say it will mature end of this year, if you enter at like say 5% fixed APY into like, then by end of this year on the 31st of December, that would be the expected APY. So that's fixed. It's not going to change because of market volatility. And the last one is the long yield APY. Long yield APY is also a number that is very specific to
Mm-hmm.
Pendle. It basically compares the implied APY and the underlying APY. So underlying APY is the APY that is paid out by the underlying protocol. Now let's use an example, right? If the example that I'm thinking of is STETH because it's the largest protocol in DeFi, and I think people generally refers to STETH yield as the benchmark rate. So STETH yield, let's just say it's paying out 4%. That's the underlying APY. Implied APY is the number that is currently traded on Pendle. It could be 3%. So the aggregated view of the market on Pendle is that in a year's time, the APY of STETH should be at 3%. So now there is the underlying APY is 4%, but the implied APY is 3%. So there's a slight difference there, right? So in this case, the long yield APY basically tells user that if you were to buy implied yield now, you have there's a difference. So and long yield APY is like a representation
How
of
much the difference is?
I think whether the market. Yes, correct. Yeah. So if it's positive, that means the market is currently undervaluing the implied undervaluing the yield. So the implied yield is usually lower than the underlying yield. So in the case of the implied yield being higher than the underlying yield, then that would reflect a negative long yield APY.
Exactly. Actually, as I'm seeing right now on the Pendle page on the markets on LRTs, almost all long yield APYs are minus 100%, which
Negatives.
means the implied APY is much higher than the underlying APY.
Correct. And this is because a lot of these markets have points, but points are not quantifiable until they realize into tokens, which might come at a later stage. So right now, because points are not quantifiable, they're actually not accounted for in the implied yield, um, in the tabulation or the pricing of calculation of the implied yield. Hence, even though people are expecting earnings in the form of airdrop tokens subsequently, and they are willing to overpay it, and because of that tendency, right, they generally don't use the long yield APY as a reference.
Mhm.
Long yield APY is probably more relevant when there is no points, and it's really just like the actual underlying yield against the implied yield.
Very good. So thanks for all these clarifications. It's a bit technical, but I think it's worth for the audience to know a bit more about the nuances of all these different kind of yields. So now let's talk about strategies. And let me put a beginner hat here um, in terms of yield and PT and YT. So tokenization of yield. So there are yield-bearing assets like STETH and all these LSCs and LRTs, which provide yield, and then um, what Pendle is doing is separating the yield bearing part, which is YT, from the principal, which is PT. And now people can express different views on these yields. So they can say, okay, I think the yield going to go up, they're going to go down, etc. So now let's imagine a scenario. We have ETH on one side, the native ETH, and then the yields on ETH on the other side. Now, so there are four scenarios that I can see because we have two binary variables here. On one side, I can be bullish or bearish on ETH itself. And on the other side, I can be bullish
mm,
or bearish on the yield of ETH. So now, giving some numbers to
mm,
these scenarios, let's say that I'm super bullish on ETH or STETH as an equivalent, and I think that in 2 years,
mm,
I think that if ETF is going to be approved, and in 2 years, ETH will be valued at 10k. So this is the ETH component, and then there is
mm,
the yield component, which I think I either can think yield's going to go up in time or they're going to go down in time. And then
mm,
so there are four
mm,
possibilities. I can be bullish or bearish on ETH and the price of ETH or STETH, and then bullish or
mm,
bearish on the yield part, which means I can think the yield going to go
mm,
up or going to go down. So can I express these views on Pendle? Like, for example, let's say I think ETH going to go to 10k, but I think the staking yield, which is now around 3%, going to go down to 1%. Can I like be in a position where I kind of short the yield, aspect, all at the same time? I think ETH can appreciate in value.
mm. Um, I think for Pendle, the more explicit case is actually to express a view on the yield. So let's say in your example, right, you think that the yield will come down. The more immediate way is actually to either sell YT or buy PT because they are inversely related and they are actually in two opposing sides. So buying YT is equivalent to selling PT. In the same way, selling PT is equivalent to buying YT. Um, so I think like if you're a user and you want to express a view in like how the rates will change, then Pendle is more suited for that particular purpose. In the case that you mentioned, like the two other scenario where you are bullish on the price, the price of the underlying, I think that is probably more efficient to do either like buying the
Hmm.
spot, like which is fairly straightforward, or like yeah, speculated on a perp market or options.
Okay. And usually, what we see when so Pendle is focusing more on the yield aspect. Usually, what we observe when protocols launch, and we've seen, and there are many examples of this, because they want initially to get traction, they start with a relatively
Mm,
high APY, and then this APY goes down with time because there is readjustments in the market, and the market is efficient, so the APY goes down. So, as a strategy, can we say, kind of knowing that in advance, like kind of can you sell APY,
mm.
sorry, sell YT of a newly listed Pendle pool because you think the APY going to go down?
Yes. Yes. So I think that is definitely a very good um, I think like use case of Pendle. So yeah, if you anticipate that the yield is going to go down, so what you would do as a user is to mint the YT and then sell it away. So right now, there isn't a YT money market, so there's no lending or borrowing of YT. But hopefully, with a new implementation that we're launching, so basically it's an oracle, maybe we could enable more of um, that segment to grow. Basically, finding more utility for YT. But independent of that, I think uh, minting the YT and then selling it away to lock in a certain amount is a very feasible way to express a view there.
And now about the different users and their different risk profiles. So what people can do on Pendle is either they can buy or sell YT or PT, or they can provide liquidity, which is another thing that they can do. So
Mm,
is that correct to say, if for conservative users, maybe providing liquidity is the best thing, in the same way that they would do on Uniswap on other dexes, which let's remind that actually Pendle is an AMM, so it's kind of the same way that you would provide liquidity on any dex, you could do the same thing on Pendle, but then you would get the incentives, you would get the swap fees, and then the Pendle rewards and the VE Pendles, etc. So this is kind of a conservative approach to be a user of Pendle. And then for institutions maybe who are just want to have exposure to ETH, they can buy PT. This is something that they could do. And then maybe for more
yeah.
degen like kind of users or retail, swapping and trading of YT is maybe something that and getting all these points, etc., and trading them is what they would do. Is that a good summary of the different users' behavior?
Yeah. Yeah, I can elaborate more there, but in summary, I think you rightfully pointed out the three different ways of participating in the Pendle protocol. So yeah, generally, I think we, as for most users, we would actually just encourage users to provide liquidity. And the good thing about providing liquidity on Pendle is that if the deposit stays true until maturity, there's actually no impermanent loss because the composition of a Pendle pool is the underlying and the PT, because and over time, right, PT will generally appreciate in value, and at maturity, PT is actually redeemable 1-to-1 for the underlying, and that means at maturity, all the assets in the pool will have the same value. So because they're all effectively the same asset, right? There's no impermanent loss, because impermanent loss happens when the two assets, the prices of these assets in the same pool diverge or like move away from each other. But in the case of Pendle, we encourage users to go to become a liquidity provider if they don't have a strong view on either PT or YT side, to become a liquidity provider, because the risk is generally lower. So that's I think one important proposition of like becoming an LP on Pendle. And then of course, like with YT, we've also seen like very interesting trade ideas came out of YT because of, say, the multiplier. The multiplier is actually a very important part of points trading. Typically, when we approach a team, we will try to gain requests for multipliers for our users, because multipliers is yeah, it generally helps with the traction, and it also makes the pool a lot more sticky, because with multiplier, it increases the implied leverage of points exposure for the participant, and that means that generally translates to higher trading activity. And for liquidity providers who are providing liquidity into the pool, high activity translates to more fee, so the effective APY would would be very attractive. So this is the role of the multiplier and why it's so important for the Pendle ecosystem. Now with multiplier, I think it really depends on the protocol, and I think that the asset itself. But I think the highest we've seen in terms of points multiplier was actually with Ethena, USDE. If I remember correctly, it was as high as 200 times the points exposure because of the multiplier that they offered. So a number of users, they made very good trade in buying up YTs, and then when TGs happened, they were able to realize quite a substantial gain in the form of ENA token.
Just to clarify,
So
when
that's
you
one
say
side, right?
a multiplier like 200x, it means that compared to going directly on Ethena, where they would get some points for the actions, if they use Pendle, the same Pendle pool on Ethena, they would get 200x the number of points they would get if they had to use Pendle instead of Ethena. Is that correct?
Correct. That is correct.
Mm.
Yeah. Yeah. Um, yeah. And it's all because of the stripping of YT and PT. Because for the same amount of money, the user no longer has to purchase the underlying in order to gain the points exposure. Here, with the splitting of the points from the underlying, user is basically just buying the points. So the same amount of capital basically enables them to have higher some like higher implied leverage. So yeah, maybe with the same amount of capital, they could have as high as like 200 times the shards. This was back in late March.
So to understand the logic here, so for users it makes a lot of sense to use Pendle because of they get these multipliers compared to going directly to the protocol. For Pendle, it makes a lot of sense because it gets the TVL, the users, etc., provide more services to its user. Now, what is the reason why a protocol would use such a big multiplier compared to what they're providing on their own platform to Pendle? Is it because nobody knows them initially and they can bootstrap the liquidity of Pendle, which is established as a key DeFi player? Or is there more to it?
Yep. It's a couple of things, but I think the most important consideration for the other protocols to use Pendle gain liquidity, right, is because of the ecosystem that Pendle has developed. It means that the liquidity is can be a lot more sticky on Pendle. So, because ultimately, I think Pendle builds on top of, like, say a certain protocol, right? The liquidity ultimately goes back to the underlying protocol, but with Pendle as sitting at the top, the liquidity is unlikely to move away, and it also, because like there's actual utility for the PT and YT holders, and I think for that in itself actually warrants some multiplier for the liquidity participation.
That's very interesting. So, um, it can you say, do you see a pattern where, we were talking a few years ago about curve wars, and there was Convex and all these guys trying to have as much curve as possible. Now, this is another subject on VE Pendle, but do you see kind of a war between protocols to have the maximum points so that they can get the max TVL from Pendle?
It's possible. um, I mean, right now we're starting to see protocols, like other protocols, bribing on Pendle, but we haven't really seen a lot of activities there, partly because like maybe we haven't really pushed
Mhm.
this particular angle. um, and I do think it's probably a little harder because the points are not quantifiable, so the the outcome is not as immediate. Whereas like in the past, if it's just like a pure token play, right, you can bribe using, let's say like USDC, and if the incentive is channeled to the pool, you can price it into like the calculation more immediately.
Mhm.
Whereas for points, it's a little harder there.
Yeah, it's harder to quantify what you're actually getting. Let me talk about. Let me ask you about setting of new protocols and sorry, setting of new pools. So there are
Mm.
Pendle, because it's complex. There are a lot of parameters. There is the maturity date. Now there is these point multipliers. There is the cap, uh, the APY. What part of it is set by the protocol? They say this is what we want as maturity date or cap or whatever. What part is set by Pendle, and what part is set in agreement?
Yeah. So I think aside from the multiplier, everything else is mostly decided by Pendle. So I think, to be specific there, maturity is arguably the most important factor for us to consider. Now, Pendle really doesn't have, uh, most of the time, actually all the time, we don't know the exact, say like the TGE. As much as possible, we can only do a best guess on, like, say when the token will have the TGE. So that is kind of how we think about it. So we will converse with points issuer on their plans and the milestone. And I think many times it's also not the easiest for them to give us an exact date, because usually the preferred TGE method for a lot of these points issuer is to go on exchange. But the thing with working with exchange is that you never know the exact time. Like, you can have an estimated timeline, you can have a range of dates that you want to target, but the exchange has full control and they never disclose. Now, us being a degree further away from the points issuer means that we have no contact with um, the the exchange, and that makes it quite impossible for us to know the exact date. But what we can say is, based on the public information, the roadmap that they have disclosed, we can make best guesses to, like, for the maturity. And typically for us, in terms of maturity, we would try to set it like the last week of a certain month, right? Let's say if we want to target quarterly, we would try to mark it as at on the last Thursday of the month, because that's usually when Pendle pool, the Pendle votes refreshes. Yeah, but by and large, that's that. There's no rule there.
When looking at maturity dates compared to last year, I'm observing that maturity dates are getting a bit shorter and shorter. Like last year, we were
Yes.
seeing like 2 years, 3 years maturity dates. Is this because of the LRT narrative, which is, there is this Eigen, TG and all these different TGs which affect the points and the YT, or is it just because there is more speculation and degens, and then you're forced to kind of change it?
Yeah, it's a combination of both. So I'd say like from our perspective, right, we don't have a again like we don't have a very clear view of what will happen with EigenLayer, and then subsequently there's also AVS consideration as well, because with all of these AVSs, we also need to incorporate like the distribution methods into the contract when we set up a pool. So if we have a long dated maturity, let's say 2 years from now, we have to have too many factors. We have to account for a lot of these items that will happen in the future. But I don't think we're ready for that. So we preferred a shorter duration to, yeah, basically allow us the flexibility to launch a new pool if the situation and the environment permits. So that's I think the main reason. Secondly, with shorter maturity, because users have more certainty of what they can expect. Let's say if the pool matures in a month, users feel more confident depositing liquidity into the pool, and for the other traders, they feel more confident trading this market because the certainty is higher. So we see user activity and user deposit being the highest with shorter maturity pools. That's why, like, just going by user interest, we prefer shorter maturities over long maturities.
Yeah, I can understand that as an investor. For example, I might have some views, some bearish views, for example, on Athena, for reasons we know, on the long term. However,
Mhm.
so I might not be very comfortable to hold these, YTs and PTs if they expire in 2 years. But if they expire in 1 month, it's something that I might be much more comfortable.
You're comfortable.
Yeah.
Yeah.
Let's talk about revenue. Pendle is an AMM, so like other AMMs make money out of swap fees. Now, with the
Mm.
introduction of YTs, now you actually make I think 3% from the YT mints as well. Now, from what I remember, at some point, 100% of the fees generated, at least from the swap fees, if I'm correct, were going to VE Pendle holders, which was providing extra boost and
Mm.
trying to kind of have sticky users. Has this changed, or like, is it still the same, or now is the protocol making some revenue?
So the protocol hasn't turned on the fee, like the team fee component yet. So all the points and all the fees that we generate from AMM will go to VE panel holders. Um, at the moment, I think if we analyze the earnings, we're looking at maybe 40, $45 million in fees, independent of the um,
Means
YT points. Yeah. So I think if we factor in the points, yeah, it might be more attractive. But then again, like we never know, right? Because these are asset prices, and then at this moment, points are still points.
let's talk about some of the business aspects of the protocol. Generally, what we've been observing is that when we have a successful protocol, there is very quickly a copy of this protocol trying to do the same thing. We've seen this with Frentech last year when they launched. Quickly afterwards, we saw many similar protocols. We saw that with Unibot as soon as they launched on Telegram bot. Many others copied that, and again and again in other narratives. In the AI narrative now, we are seeing a lot of copies. uh, I'm really surprised about Pendle and its positioning, which is super unique. Why hasn't others tried to copy Pendle or try to get some market share from Pendle, in your opinion?
So actually, I think there have been there are forks and competing products out there. I think what a lot of new projects fail to realize is that um, with products like Pendle, because of the complexity, it actually takes time to build up that trust and confidence. Um, I would also like think about it like from the like just looking at some of the like products in the money market landscape, right? It took them a long time. Like say for Aave, they launched in 2017 as ETHLend, but it wasn't until 2020 when they started to gain serious traction. And by end of 2020, I believe they might have like say $10 billion in TVL already. And then for the rest of time, it's really like they naturally become the primary venue for liquidity provision, like primary the the preferred money market alongside compound because there's a lot of trust, and the brand equity is strong. So I believe, like in the case of say the points trading and also the yield trading part, we've spent a substantial amount of time investing in the brand, and I think the users who are involved in the space will unlikely migrate over to a new product just because they are like the shiny new thing. So I think that that's one aspect, right? Secondly, Pendle is actually very backend heavy as well. So we have the contracts that are open source, but there are also a lot of other components that enhance the user experience in trading that's not open source. So for example, I think like we had a period of time in V1 where the contracts were a lot more um, bloated, and the end-to-end transaction would cost a user maybe $1,000. Yeah, so that was a case when a lot of things were written on smart contracts, and because of that, the gas consideration became really really hefty. So what we did subsequently with V2 was to refine our contracts implementation and then move a lot of things to the backend. So as a result of that, the gas consideration became a lot more reasonable on mainnet and of course on arbitrums and all. But at the same time, it also allowed us to close source some aspects to protect our moat um, and safeguard like our to control our user experience better.
These are extremely
Yeah, so I think by and large,
important points that you're mentioning. First of
go
all,
ahead.
is trust and confidence. The second you mentioned is very interesting as well. The technical edge, I would say. It was always a question for me: if everything is available to everybody through the smart contracts that are deployed on public blockchains, then how do you retain your edge, if everybody can easily copy it? So one aspect is the confidence and trust that, especially early movers, like Pendle in this case, or Aave you mentioned, or Uniswap, they have it. So they have early advantage, early mover advantage, and then and this brings trust. But then there is also this component that you mentioned, which is the back end. Do you think this is a good solution that other protocols should seek to? Because there is this debate, right? There is this debate where this is a decentralized world, things should be open sourced. Otherwise, what's the difference with Web 2? And then on the other side of the spectrum is,
Yeah,
if we just keep everything open source, then everybody will copy us and it's going to be hard to compete.
so I think I think to be clear, right, the contracts are open source, so that's why they are forks of Pendle, and that's why having that brand and reputation helps distinguish us and the forks thereafter. But also, I think having just an additional layer of um, just like a technical moat allows us to protect our position better. I think it's really a balance of things. For us, we open source the smart contracts because I think it's important. People who participate in our protocol are depositing real money into our contracts, and they need to know what goes on so that there is predictability in the activity that they do. But at the same time, we like for the front end, back end, we we close source it so that we have better control over on the UI UX, and then if need to, we can make faster adjustments.
So every founder or every project, they have some goals and objectives and KPIs that they want to reach. Uh, I think by any standards now, Pendle is extremely successful in terms of users, in terms of TVL, in terms of even token price appreciation. How has the game of setting objectives changed for you right now? Which now you're among the top, I think, 7 protocols by TVL, and the other ones are really established old projects like Uniswap, etc. So going from 500 million to 5 billion is not easy, but you've done it. But going from 5 billion to 50 billion is another thing. How do you, now that you are at that level, like what are some of the objectives for you to stay successful as you've been so far, and how have the metrics changed, KPI metrics?
So yeah, the metrics definitely change, but I think I'll be honest with you. I think we have been very lucky, and we've been a great beneficiary of the restaking narrative. but I don't think we are a very successful product, because I think all these things happen in a very short span of time, and we have a responsibility to protect it so that we can leave a legacy here. So I would say the jury is still out there. Like we need time and continued effort to prove that we're worthy of that title. But regardless of that, right? I think what we are currently experiencing is quite interesting, because now what we have to think about, the mental model for our current state is actually very different from the state of 2023, just a year ago. Back in the days, let's say we were, say, $50 million in TVL. To double that to 100 million, we have to think about our strategies in a certain way. And I think we have successfully executed that by staying on top of the narrative, and really just identifying good projects to work with. Now we are closer to $6 billion in TVL. To grow that requires a different consideration. And it definitely requires more than just um, working with good projects. It actually involves growing the ecosystem so that we can also benefit from that movement. Because ultimately, I think, yeah, to double 6 to 12 is different ball game altogether. So what we have in place is of course, like now, in aside from just making product improvement, it's also really looking at how we can scale the business so that we can yeah, allow like trading in size. We can accommodate bigger yield trading appetite. So these becomes like the main guiding principles for us to think about when we're designing a new implementation on top of what we already have with V2. As for the numbers, it's really hard, but yeah, hopefully we can. We never really met our goals in the past, right? Like we set ambitious goals, and then like I told you last year, we were hoping to do 300 million in TVL, but for the entirety of last year, we didn't meet any. And then suddenly, just a difference of a couple of weeks, everything changed. We want to, I think internally, we still continue to set ambitious goals, but I think it's really just more for us to think about how to execute things and use that as a guiding light for us to think about our strategies.
So for this last section of the interview, I would like to talk more about DeFi, so that some of the learnings that you've acquired through these years might benefit other protocols. But before, I had a question relative to, you have now 2-3 years of data in terms of what you've done in the protocol and different pools and different things that you've changed. And Pendle is a quite complex protocol, so I would assume that its users are also, they have some kind of knowledge or skill set. They're not just beginner users. How sensitive the changes that you make to pools, I mean, how reactive are your users to adapt to the new changes in the pools? For example, there was this LRT narrative, and the APYs are changing constantly, and at some point the points are maybe changing. If you have pools A and B LRT protocols, everything is the same. If you change the APY of protocol B by 5%, how fast do you see the changes and people and the market actually efficiency kicking and reacting?
I'd say like by now, it's actually quite improved. Maybe in the past, right? Just as an example, in the past we could see an opportunity exist for days without getting
Okay.
acted on. Now, I'd say maybe an hour, but usually I think
Wow.
within minutes, people would already take advantage of it. Yeah, because we had we have attracted a pretty broad spectrum of users, including the very sophisticated ones. So they probably have alert systems and bots to keep track of changes. And then, of course, like there's also improvements that we have incorporated to the front end, right? So we have established a limit order system where users can just indicate the price and the size that they want to participate in a certain market. And when there's a match, then the transaction happens. So all these things cumulatively resulted in a more efficient market. And I think, yeah, this is an area that we want to continue to improve on and iterate so that we can reduce reduce the inefficiencies.
Very interesting. Um, so you've started your journey in DeFi with Kyber, then launched Pendle, and you've seen a lot of protocols succeed and fail. Mr. Beast is a pretty well-known YouTuber, and he said in one of his interviews that there is a formula for success if you want to be, for example, a YouTuber. He has now this knowledge. It requires a lot of experience to have this knowledge, but he says that I can, at any time, start a new channel, and grow it to 20 million in subscribers in no time, without even putting my name, just because I have these skills. Now that you're at this stage of the success of Pendle and with the experiences that you have, do you also think there is a like kind of a success formula in DeFi? If if you had to start over with a new protocol, without a Pendle, TN name, is there like some kind of magic formula for protocols to succeed?
Well, I wouldn't compare to Mr. Beast. A lot of respect for what he's done. Um, but I can share like my my own observation and learnings. So I think in the context of say DeFi, right? I think in my experience, knowing the strength and weaknesses is 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 probably one of the most important things that you can do when you're starting a team. Because I am of the opinion that there isn't a cookie cutter approach to launching a product. There is a broad theme, but ultimately it boils down to what you're good at and what you're not so good at, and then you cater your strategies to your strength. So, like for example, right, I am not someone who is very vocal on social media, and we've seen a lot of successful cases of founders and teams with very strong social media presence. I'm just not one of them. I will tweet occasionally, but usually it's revolved around, say, the company milestones or like certain implementations. But I'm okay with that because I think we have other ways to gain attention and get our message across. This is just me knowing what we're good at and what we're not so good at, and then like really crafting strategies around it. So I think most importantly, yeah, it's having that awareness and be authentic um, to the approaches. I think especially in a case like in crypto where we see a lot of products forking off each other. Again, like by design and by nature of DeFi, this is actually an expected outcome. Um, and I think like far too many times because of this expected outcome, we see a lot of people doing things that they might not be comfortable with, and then they end up not liking it as much, and then it doesn't become effective. I think it's really important to know where you stand, your positioning, so that you can design strategies and tactics to best elevate your strengths, and then yeah, minimize your weakness exposure. Um, but yeah, this is I think to the extent that I would do if I were to start over again. And then of course like that also extends to knowing my own strengths and weaknesses so that I can find
Mm-hmm.
the team members who can be complementary to my skill sets. I think I am by now I think I'm reasonably comfortable with people and I can strategize at a higher at a high level quite decently okay. And what I need is someone to complement with me in say having the execution ability and just make sure that things are organized properly so that we can move at a certain rate. But yeah, that's again that boils down to having that awareness of knowing what we're good at and what we're not good at.
Mm-hmm. Betting on your strength and acknowledging your weaknesses so that you can find partners and people to work with to complement on that. Very interesting. So we've seen in DeFi actually few examples of projects having a short success. I'm thinking about, for example, Frentech, which last year in some days they did more revenue than Ethereum, uh, and the same thing for Unibot. And now we are seeing here and there, different variations of these things. A Degen platform for launching meme coins that does more revenue for some time. On the other
Yep.
side, we have like some of the top protocols by TVL, for example, on Tron blockchain. there is like it has 6 billion in TVL, but maybe just few whales putting their money there. How do you define success in DeFi on in your side?
Oh, in my case, I actually look a lot less on numbers. I care more about the impact. So as an individual, I am very motivated by impact at scale. So I realized that over time that I want to make products that people would use. Um, and I think so far Pendle has been able to achieve that. Maybe not to the desired level yet. I mean, currently we have a couple of thousands of daily active users, which I think is relatively healthy compared to a year ago. But seeing how we enable a market that wasn't previously possible, where users can now reallocate their resources based on their view on a certain protocol and really making serious wealth through our venue, I think that is quite meaningful. And I'm much more driven by that purpose than just focusing on the sheer numbers.
Having happy customers.
Yes.
One of the things that protocols initially like have to think about, and it's a strong decision, is on which blockchains to launch. You've been now you have launched on a number of different blockchains. Uh, Actually, Arbitrum and BNB and I think Mantle and others, Ethereum, of
Mm.
course. You
Yep.
benefited a lot from the Arbitrum season. I mean, your launch on Arbitrum. Honestly, your launch on BNB on my side, I was expecting more to happen because BNB is such a big chain in terms of TVL, and also you're based in Asia, which kind of has overlapping demographics. But how has been your? So I'm thinking maybe the narrative is more important than the blockchain. How has been your experience with
Mm.
launching on different blockchains and the decisions? Because it's a big effort.
Yeah, sure. So I think for us, actually, the consideration is pretty straightforward for Pendle. Pendle is a second order derivative, so we don't have to be a first mover on any ecosystem. And we typically will only expand to a new ecosystem when, number one, there are primitives there. And then secondly, the primitives that we are interested in supporting have sufficient TVL, because otherwise it wouldn't make a lot of sense for us. And if we were to spend, let's say, like a month or 2 months to launch a new ecosystem deployment, we probably can do much more with that same amount of time if the TVL is not sufficiently thick. So yeah, that's really just that. And I think like for, of course, like certain times we have to make assumptions. Like in the case of BNB, when we decide to go on to BNB, it's also us taking a view on how the user could respond to, like, would respond to our launch. But yeah, sometimes they don't work out as well. But that's really the way I see it, is really part and parcel of experimenting and then be comfortable with things that are not going in our favor. Um, yeah, and then of course, yeah, just working with the foundation and having strong support from the foundation would mean a lot to us as well.
Hmm. Amazing. Let's conclude with narratives. You're big on narratives. I'm also a narrative trader. And you've been actually very successful in writing the narratives, which have contributed a lot to the success of Pendle. What are so we know about restaking. That's the big narrative of this year. What narratives that people are not talking about are you seeing for the upcoming 2 years?
So um, again, I think like we got really lucky with restaking, and I think the run for restaking will likely sustain for a bit longer, because after EigenLayer, and given that EigenLayer has already provided a, a precedence of what can potentially happen with restaking, now we're also seeing alternatives to EigenLayer popping up, right? So there's Karak and then Symbiotic. So with the presence of these two protocols fighting for TVL and that and growing that ecosystem, I think the interest in restaking will likely revitalize because of the presence of these two competing products. Um, So I'm hopeful of that. And then of course, like later this year, maybe with AVS, like more AVSs, the opportunity for restaking will become very attractive. And then the other one that I am also very hopeful of is actually the Bitcoin L2s, because I think this year Bitcoin has made significant milestones. Firstly, with the ETF approval, and then halving. Um, I think the adoption of Bitcoin is going to be a lot more serious from there on, and I believe that most sensible users would want to have a way to utilize their Bitcoin to generate wealth. And I think Bitcoin L2s can potentially be a good avenue for that. So I would expect that funds of like serious crypto funds would try to be involved in the Bitcoin L2 segment. And if if we have enough number of interest in a certain narrative, and as we've seen with the Bitcoin L2s, I think they have a very strong chance of becoming a major narrative force, maybe in the second half of this year.
Interesting. In terms of like token appreciation, ETH has underperformed Bitcoin for quite a while now and upset the community. And even actually, if you had staked ETH or restaked, you would have underperformed probably in the last year, holding either Bitcoin or Solana. How do you see the future of staking yields on Ethereum now that we have, as you mentioned, Bitcoin L2s are becoming a thing? Staking on Solana is growing a lot and at a quick pace. How do you see the future of yields on Ethereum?
Mm. Hmm. I think it will be all right. Um, but I honestly don't have a lot to comment there
Mm.
because I'm not the most familiar with this subject.
Very good. So we like to conclude the interview with some trendy topics and hot takes. A lot of people have discussed recently about this low float, high FDV like kind of projects that are launching. Do you have any opinion on this? Also, many of these protocols have pools on Pendle. Any thoughts about this topic?
um, nothing too strong because I think depending on the nature of the product and also the duration of vesting, I think different approaches could make sense. But as a as a personal guideline, I am someone who would look at the FDV if I were to take on a position. But yeah, my view remains that just depending on the nature of the product and also the duration, like there are different ways to best position yourself. Either through the market cap or the FDV.
So FTV is not a meme. Okay, great.
To me, it's not. Yeah.
Yes. Thanks a lot, Tien, for this very insightful conversation. It's always a pleasure to having you in the podcast, and looking forward to continuing to see the growth of Pendle and its success.
Well, thank you so much for having me, and yeah, really appreciate the conversation.